Hello everyone and welcome to episode 4 of Rate My Trades. Last week we weren't able to release an episode and we're very sorry for that, but we are back. So in today's episode what we're going to do is we're going to go through all updates on Brexit, all major events that have affected the markets in the past 2 previous weeks. We're going to rate my trades, so all the trades that I've placed from the last episode and see how they're going. I'm going to give you some more trades, then tell you what we're thinking about the market so far and all the major events for next week. So yeah, let's keep it moving. First of all, update on Brexit. Now, the last time we were here together, Theresa May was about to produce a new deal to the House of Commons. Now that happened, and in the last episode I said that it would be terrible if the House of Commons didn't accept that deal, because that would have been the 3rd deal, and if they didn't accept that deal it would have been likely that she would have resigned. Now, fast forward to now, 10th of April, unfortunately the House of Commons didn't accept the deal and we are still in a mess. So the deal was rejected, and since then Theresa May has now agreed to speak with Labour to negotiate and try and come to a final deal. Finally. So currently what has happened is Theresa May has gone to the EU, and today there is an EU summit in which they are going to decide on whether or not to accept a further extension for Article 50. Now this extension, Theresa May's asked for it to be till the 30th of June. Now, if we are to get that extension, all the top dogs in the EU need to agree. So if one doesn't, then back to the drawing board. If they don't, if any don't, then we're not going to get any extension. And we're going to leave on Friday. That's not looking very likely. It's not looking very likely because the president of the EU, he actually has said he doesn't want anyone to be humiliated by these Brexit negotiations, so by the outcome. He wants everyone to, come out with a good record. But at the same time as well, the president of the EU, he's coming out with a different angle, because he's thinking he doesn't want to give us an extension to the 30th of June. He's thinking give us an indefinite extension for another year. Yes, so that would have been 3 years now that we've been in this crisis. Now the reason he's saying that is because he basically says he has no reason to believe that if Britain is given an extension till the 30th of June, we will come to any form of decision. So he basically has no hope in us, hope in the UK. Whether we are given an extension to the 30th of June or another year, either extension, any extension is going to come with a condition. And at least one of those conditions is going to be, this is going to be it, so they say. So this is supposed to be the last negotiation, the last talk about any extension, blah, blah, blah. After this, we should know what's happening. There was a document circled amongst the members of the EU. In this document, it said that Article 50 will be extended for on reasonable terms, with a deadline of XXXXXXXXXXX. So with that, people are thinking that, okay, so what does this mean? Does this mean it's indefinite? Does it mean what? Does it mean this? Does it mean that? Actually being said is that it's indefinite for the next year, but only for the next year. And within this year, if a deal is agreed upon, then it will end in relation to the terms of that deal. But if not, then we've got that deadline of the year, if that makes sense. However, at this point now, we don't know, because that document that was going around, it was just a draft. The EU summit is today, and the answer will be coming out tonight on whether we're given an extension, or whether we're leaving on Friday, or what. So, till this point, I think it's fair to say it's still a mess. it is still very much a big mess. In terms of trading, for us traders, we don't know what's going to be happening. So the way I'm seeing it is, if we're given an extension for the next year, we're most probably going to be leaving close towards the end of the year. And the way I see it right now, it seems as if the GBP pairs have been within a channel, and it seems like they're in the middle of that channel. So I would look to buy it at this point if we're given the extension, but if not, then yeah. But at the end of the day, who knows really? At this point, I think they should just all kiss and make up, but we'll see what happens. Also, in terms of Labour and the Conservative Party, now they're speaking to each other to try and come to terms with a final decision on this deal. They say that if they're not able to come up with a solution, a final answer, then it's looking like they're going to give it back to the House of Commons and ask them what we should do. And the people in the House of Commons, if they're given this vote, we may get another vote for whether we want to stay or leave. Now we've covered Brexit, let's look at the rest of the week's events from the 28th of March, which was the date that we left you on. So, if you watched the last episode, you'll see that on the 28th of March, the USD value of all goods and services, which was adjusted by inflation, adjusted to suit inflation, was released on the 28th. The actual figure for this was 2.2%, and the forecasted figure for this was 2.4%. So this shows us that it was actually worse than forecasted. However, if we go into the charts and look around, look through all the USD pairs, you'll see that for this date there was no big reaction. So yeah, there's not much we can say about that other than that. So what we're going to do at this point, we're going to keep it moving. Friday, 29th. 29th of March, there was the GBP current account release. This was predicted to be negative 22.9 billion, and the actual figure was negative 23.7 billion. So that's almost a whole billion below what was forecasted. Now, this created quite a lot of volatility within the market. Moving on, Monday, the 1st of April, we saw there was AUD building approvals. Now, this figure is released each month and it shows the amount of new building approvals that were let within the country. So this is AUD, so Australian dollar, Australia, Aussies. So for this one, it was forecasted to be negative 1.7%. Now, as we can see, the actual figure that was released was 19.1%, which is a massive difference. However, unfortunately, this didn't really create any volatility or of any sort in the market. However, what did create some volatility in the market was the retail sales release, which was released the next day on Tuesday, the 2nd of April. Now, this was forecasted to be 0.3%. The actual figure was 0.8%. But for now, that's all we've got on Brexit. And let's move it on. Moving on to rate my trades. So if you remember from the last episode, there were a number of currency pairs that we were looking at. Now, it's that time of the show where we go back to those currency pairs and see how they progressed over the past 2 weeks. See if I was right, see if I was wrong, see if I know what I'm talking about. So let's go. Starting off, so first of all, we're going to look at USD MXN. Now, as we can see here, in USD MXN, it's not going too well, but what we can also see is that it's still within the channel that we set out. So what I'm currently doing now is I'm just keeping this position open, and if it does fall below my stop loss, then that's when I know that my prediction was completely off. And if my prediction is completely off, then I'm going to close the trade and set a new take profit. With this channel that we currently have, we can use this channel to predict where the new take profit would be. And if you would like to learn where you would place that, you can sign up to the Icon Traders trading course. But that's not what we're here for today. Next currency, Euro USD. Now, this currency, since we first pointed it out as a sell, it is going perfectly, to be honest, falling perfectly into the take profit area. I'm going to give you a slight tip here, free information. Here, what we can see is, so here we've got the 4-hour chart, and the candlesticks they just moved above the Ichimoku cloud. Now, normally when trading, what I tend to do is, if it's a sell, so on a long-term week chart, if I'm selling something, I would open that sell, but then move into the smaller time period chart. And if the candlesticks are above the Ichimoku cloud, so in this sell, for this instance, then at that point I would close the trade. And by doing that, you never really lose money, because if you're selling and it's always below the Ichimoku cloud in the smaller time periods, it's always just going to be falling. You're always going to be in profit. Remember that. Euro NZD. So now, with the Euro NZD, looking at the week chart, as we can see here, since we first pointed out this as a sell, it's fallen nicely into the profit. Over the past 3 weeks, well, this week included, and it's currently Tuesday, we've seen a rise, and it's rising back up close to around our open. However, if we look at the 30-minute chart, using the information that I just gave you, you would see that now would be a perfect time to sell, because on the 30-minute chart, it's just fallen below the Ichimoku cloud. So what we do now is we go back to the 1 week chart and we keep it moving. Here we have CAD CHF. Now, since we called out CAD CHF as a sell, over the first week it went perfectly, and then the next 3 weeks after that, including this one, it has gone rather against us. So not really what we were expecting. We are currently back at the open rate. However, if you look back to the first episode where I pointed this out as a sell, you would see the reason that I pointed this out as a sell was because it was in a triangle trend. Now, it still is within that kind of triangle trend. If we take this line, the top resistance line, we can also extend it, and we can see that it was also tested back here. So really and truly, although this trade is currently going badly, it's still falling in line with everything that we were thinking. USD CAD. Now this is another one. Since we pointed this out to be a buy, we've come a long way. We originally were thinking about buying it here, and that's when I originally did buy it. Now remember what I told you, that tip with the smaller time periods. So right now, as we can see, on the 30-minute chart, it came below the Ichimoku cloud, above, and then below again. So right now at this point, what we're doing is we're going to look for another entrance onto the top of the Ichimoku cloud, and as soon as that happens, we're going to buy it again and continue riding the wave. EUR, AUD. EUR, AUD we're looking at as a sell. Here, what we can see is it has just broken below the Ichimoku cloud quite nicely on the 30-minute chart. On the day chart, we're looking at quite a nice descent on the day chart below the Ichimoku cloud as well. This trade is going perfectly right now. So he's the man. No, we're not doing that. EUR and OK. So it seems for the first time in this series, I've been wrong. But the funny thing is, even when I'm wrong, I'm right. As we saw here, I put in a support line. Now, it seems this candlestick here has broken my support line. So, what I'm going to do for the next week, I'm not going to place a trade on this. And we're just going to wait and see if there's a pullback. If there's a pullback, then we're going to expect for it to just go back to the top of the support line and continue. But if not, then by next week, if we are still below the support line, then at that point, we're going to look to sell. And not only are we going to look to sell, it's going to be a massive sell, and we're going to make a lot of pips. Notice how I said pips, not money. When trading, don't look at the money that you can make from it, look at the number of trades you can win and the pips you can win from each trade. Because when linking your trades to money, psychologically, it just gets messed up. So it's a lot better this way. So even when I'm wrong, I'm right. Let's keep it moving. Gold now as well. Looking at gold here, let's just go over to the week chart. So as we can see here, on this one, I spotted quite a large triangle trend. And currently what seems to happen is I predicted this to be a sell, and I predicted my take profit would be around 1,260. Now currently for this week, so the past 2 days, because we're currently on Tuesday, we've seen a rise in gold. However, if we move over to the day chart, you can see that gold has just broken below the Ichimoku cloud, and now it's riding, I like to call this riding back up the cloud. So normally what would happen is it would just ride up to the top of this section, and then after this we could expect to see a continuation of the fall. Now if that doesn't happen, we're going to look to continue buying gold at around 1,340. But if not, then our original sell take profit will remain at 1,260. So we're still on track with this trade. Now, there's just a couple things that I wanted to say about trading in general, because a lot of people just don't get this. So with these trades here, if you've been following the series, you'll know that what I predicted has come true so far, in terms of the general movement and where the prices are moving towards. But also what you'll be able to see is that the prices don't move towards these price levels that I'm setting in a straight line. They vary. Now, what I think happens a lot with most people that try to trade is they'll spot a trend, and then they'll place a trade based on that trend, and then the trend, if they're expecting something to rise, then it will start rising, and then it will fall, and then it will drop below and hit their stop loss, and then they'll lose their money because they placed a massive trade. They'll blow their account, and once that happens, what do? Instead of going back to the fundamentals, doing things like what I like to call riding the wave of the trade with the side of the Ichimoku cloud on the smaller charts, they say that trading is a scam, you can't make money from trading, blah 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 blah, etc, etc, which is all rubbish, because you need to remember that trading is a way that you can make money consistently. You can consistently withdraw money from the market, but it's not a get rich quick scheme. When you start trading, don't expect to see mad profits overnight, mad profits by next week, by next month. It is possible, but it's very unlikely. And more times out of 10, if you're approaching it with that approach, you're going to fail. Reality check. Bear that in mind. But let's move on. Another quick tip. Don't overtrade. Don't be thinking, I just need to find trades, I need to find trades. A lot of people when trading, they just want to trade, they want to place something. Sometimes there's nothing to trade on. If there's nothing to trade on, it's better safe than sorry. You don't need the hassle because you're just going to lose your money. If you don't know what you're doing, if you're not 100% sure on a trade, just don't do it. Also another thing, for these long-term trades that I've got open, let's not go with this one, but EUR, AUD, USD, CAD especially, CAD, CHF. So these ones that are going badly right now, notice that I predicted the trend and I'm riding the wave, and although they're going badly right now, I'm still sticking to my guns. If trading, you should know what you're doing. If you don't know what you're doing, you're just gambling. Stop. You shouldn't be gambling because gambling is silly. But when trading, you should know what you're doing. If you know what you're doing and you've got your idea, stick to it. Just stick to your idea. But at the same time, because there's a very thin line between sticking to your idea and knowing what you're doing and being deluded. Now, if it's the case where you're in a trade and you're holding on and you're just relying on hope, you're doing the complete wrong thing, and I'd advise you to just close the trade right there, right then. And this is another reason why I tend to do my ride the wave theory, because it's a lot safer. When the candlesticks are above the Ichimoku cloud on the smaller time scales, you know, right now, most probably it's not going to be the best time to sell because the price can't be falling when the candlesticks are above the Ichimoku cloud. If you look into that a bit more, you'll see I'm talking 100% facts. If you'd like to learn more about my strategy, you can sign up to the Icon Traders trading course, the link will be below. Now, so it's now that part of the show where we look at all the major events that are going to affect the markets in the next week. So coming week until the next episode, which will be released by next week Wednesday. And surprisingly, for the next week, until next week Wednesday, we actually have no predictions for any statistics that are going to be released. So there are none. And on that note, we're going to have to bring this episode to an end. Thank you very much for watching. What are you still doing here? Go be great.